Okay, in today's video, we're going to talk about how the spread is calculated on currency pairs, and we're going to focus on the top 28 pairs that are most commonly traded. Okay, so let's talk about first what the spread is. The spread is just the difference between the bid and the ask. You can see on the Euro USD that if you have 4 digits to the right of the decimal point, the spread is 1 pip. So you can see that 1903 minus 1902 is just 1 pip, okay? But look on the USD yen, once again, you have 5 significant digits altogether, okay? So 52 minus 49, that's going to give you 0.03, which is 3 pips. So it's 3 times the spread of the Euro USD, which is a very liquid pair, the most liquid pair of all currencies out there. Now, in this particular case, you get an extra significant digit, okay? So to the right of the decimal point, you'll have 5 digits as opposed to 4 up here. So the spreads are expressed in tenths of a pip. So let's look at this example here. In the Canadian dollar yen, it's 487 by 520. Well, if you subtract that, it's 3.3 pips. Now up here you had round numbers of pips, like 3 pips. Down here you always get tenths of a pip. And this is how most platforms work now. They're expressing, because of the liquidity and the competition and the amount of Forex traders that's come into the market, they're now expressing everything in tenths of a pip. So note the difference here, the number of significant digits. To the right of the decimal point, that would be 5 significant digits right there. And there's one example calculation for you. So the bid and ask price, pretty simple. Okay, so the bid price is the highest price that all of the market participants are willing to pay for a currency pair. And you just group them all together and it's the highest price. So you can see in this case, these are all of the market participants. And you can see that the highest bid price is color coded here in red. Then you take the lowest offer price, okay, that all of the market participants in real time are willing to pay. And that's how the spread is created. So it's the highest bid, okay, of all the market participants. And then the ask would be the lowest price that all of the market participants are willing to accept. This is why it's called the spot price, and it changes. It changes from second to second. Okay, so there's your bid and ask spread. That's why the spreads are, that's how the spread is expressed, in this case for the Euro USD. Now, when I say market participants, this says bank, 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 bank. That's really not true. The way it works now in 2021 and for several years now, these may not be banks at all. These are just market participants. It could be a dealer, a liquidity provider. It could even be a retail trader. Now, it could be a bank, but anyone who deals in the Forex, if you've just got 5 mini lots and you're putting them out there in the market, you are a market participant and you will be side to side. So all the big and small players are in the market together in the same marketplace. So all of the variable spread brokers, where the spread changes all the time, these are ECN brokers, electronic communication network, and the spread varies throughout the day. Okay, so the spread will vary throughout the day. And a market order, just remember this, a market order is not the bid or ask price you see, it's the next available price. That's because it's real important to know this, because this is the current bid and ask. If you press the button to place an order on this pair, the Euro USD, you may not get this price. You might get this price, but you might not, but you'll always get the next available price. So what does the spread indicate? Okay, the spreads are pretty tight on all 28 pairs we trade in our trading system at forexearlywarning.com. The lowest spread is always going to be the Euro USD. This is because the Euro and the US dollar are the two most liquid currencies. But so the spread is an indicator of liquidity. The lowest spread, the Euro USD, it's just because this particular pair has the two currencies with the highest liquidity. Out of the 28 pairs that we trade, some spreads that we are working with are, in the 4 to 5 range, but it's still not that much compared to the amount of pips that you can make. But the Euro USD will have the smaller spread because it's more popular, but that doesn't mean it's not the only pair you can trade. You can trade all 28 pairs that we list on our trading system, and the spreads are reasonable on all of them, especially in the main trading session. Now, the spreads are not constant throughout the day, and in the main trading session is when the spreads are always the lowest. You can click on this link right here and we'll talk about the main trading session. The main trading session is the combined London-New York session. Okay, if you go to that link, you'll find this article, Trading Sessions. And so you'll have some liquidity and low spreads in the Asian session. The absolute lowest spreads will be in the main trading session. And so this is because the Asian session, you have limited participation in the Australia Tokyo market. In the main trading session, all 8 currencies, the spreads are really tight and you have the most market participation. Okay, so you have in the main trading session, commodities markets, futures markets, options, European, US equity markets are all open, so there's more market participation. So when you see the spread change throughout the day, there's 2 reasons. One of them is the liquidity of the pair, and number 2 is time of day if you're operating outside the main trading session. So this is how the spread is created throughout the day, and this is why the spread varies. So this video, how the spread is calculated, is presented here by Forex Early Warning.